Well, hi, everybody. Welcome to the Buffett and Beyond Saturday Stock Market Recap. And this is January 17, 2026. We're in the middle of the month and we're just beginning earnings season. And remember, folks, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And the market, well, 2 weeks into the new year, and the market is up just over 1%. And some of the swings in the individual stocks are a bit wild already, as earnings season will be adding to some of the seasonal volatility. Both the S&P and NASDAQ were down for the week. Our growth portfolio is up 4.5% over the past 2 weeks. So that's pretty nice, but there's some wild swings within the portfolio. Now, our weekly stock analysis video, GE Vernova has approximately 25% of the world's electricity being generated using its technology and equipment, and it's up already 6% for this year. And this spinoff from parent company General Electric hopefully will electrify your portfolio, or I should say our portfolio. ETF video, well, let's see which stocks are working and which stocks are not. How about our top stocks and the top ETFs? Yeah, let's take a look. And we look at the Bollinger Bands or volatility bands, the top and bottom blue line. Middle line is the 20-day moving average. And we can see these bands are starting to come together. And what happens usually when they come together, the market does nothing for a day or two and then all of a sudden shoots one way or the other. And we're looking at this volume down here. But it was the old options expiration, which is the third Friday of the month, so we would expect higher volume, but we see higher volume on a down day, which does not excite us one bit at all. And down here, our intermediate term indicator is not telling us anything, except that black line is starting to point down. But let's look at another indicator. And here we go, same S&P 500 20-day moving average. You can see here it was tested nicely on Wednesday. And what bothers us is we can see that the market generally went up a little bit. And we're talking about, 1% in here. But this indicator is pointing down. So that gives us a short-term bearish signal in here. And hopefully it's over soon. And here's that heavier volume for Friday. Once again, this vertical red line. Now let's look at the QQQs. And we don't quite see the same pattern formation for the QQQs. And that's because the stocks in the semiconductor and the tech area were a little stronger for a while, or a little stronger this last move up, but we still have this 20-day moving average, the red line in here, 20-day moving average being tested once again. And we've already had the 50-day moving average tested a couple of times in here. And we'll just have to see what happens. The good things with the NASDAQ 100, the QQQs, the NASDAQ 100, is that the volume was lighter on Friday than it was on Wednesday when it tested the 20-day moving average. So that's a good sign. And again, its intermediate term indicator is telling us absolutely nothing. And let's look at the protection. January protection expired on Friday. And during the week, we put out our letter and we said we want to buy the April SPY 600 puts. And you can see the numbers here. The SPY 575. Now the SPY is what? It's 1/10 of the S&P 500. And this is about a $200,000 portfolio. But you can see that we bought, as the market moved up, we bought a higher put. So we keep upping our insurance each month if the market rises higher. So that's a good thing about buying the 3 puts in here several months out. And for a $200,000 portfolio, you could have 3 puts and be fairly well covered, about 15% below the market. So it's really disaster insurance. Same thing with the QQQs. If you have a portfolio that's more tech orientated and semiconductor orientated, then you might want to buy the QQQs, a little bit more volatile, a little bit more costly. And we went out and you can see again, we raised the puts up a little bit from 520 up to 530 as the QQQs went up. But the QQQ was up only about 1.1% for the year. So it hasn't moved much at all. And this is earnings season. Earnings season is absolutely crazy. So, folks, we had a rough week with the S&P and the QQQs and the NASDAQ all down for the week, just a tad. And earnings season is here. The banks did pretty good this past week in their earnings, and we have the rest of the market coming out over the next couple of weeks. So it's going to be a wild swing, and this is where we would like to step back because it's earnings season, and we don't know where the market's going to go and how much any one particular stock is going to move during the day. So, folks, that's it. You go out this weekend, take your mind off the market, be with your loved ones. Most of all, stay safe, and we'll be right back here in a couple of days.